But Rick, get to the numbers, please.
Yes, October and November for the big jobs report. The only thing is it's not Friday. Here we go. November's number comes in at 64,000. 64,000 on non-farm.
Is that good? Is it bad? Well, we thought it was dismal this morning because somebody said there was over 100,000 job losses. So what's actually going on right now? Well, if you're watching this video, you're probably a homeowner, maybe a home buyer, realtor, loan officer trying to figure out what in the heck's going on with those and the whys behind it. So today what we have is a jobs report that's kind of a head scratcher. One report came in and said there was a bunch of new jobs. Well, not a bunch, 60,000. And another one said, well, they basically fell off a cliff, over 100,000 lost. So let's dive into the true data that's actually going to affect these and why. Let's get over to Rick Santelli so he can give us a little bit more of this news. I'm going to show you how the markets, the bond market liked this today, but the equity markets didn't. But why this might not be as bad a news as what the markets were expecting for Fed rate cuts. We're going to talk about that because the numbers that we're going to go over don't look as dismal as they do on face value. So, Rick, take it away for us, buddy.
And if we look at average hourly earnings, they are up 0.1% year over year, up 3.5. These are both a little bit light compared to expectations. The average work week contracts. Excuse me. We're looking for a contraction at 34.2, comes in at 34.3. The unemployment rate, and this, of course, is what everybody's been waiting for, did indeed move up to 4.6%. 4.6% would be the hottest going back to July of 21 when it was 4.7%. If we look at
Okay, so now the markets, if we look at it, you might say, okay, this is great news, or maybe it's bad news. What is it? Well, let's get over to it. I want to show you all the information that actually came in today, and there was a whole assortment of data, but we actually got October and November's data, and that's what's really confusing here. So let's break it down, the numbers through here, but you really have to pay attention to what month they came out with today, because since the government was shut down previously, that we got back-ended data. Let me explain. So here's what we want to look at. Non-farm payrolls and average hourly earnings and all this stuff. Make sure you watch the date right here. So this is October, and this is MON, means month over month. Okay, so we have average hourly earnings in October. Previously, reading was 0.2. It actually went up to 0.4. But then we go down through here. Average hourly earnings month over month on November was down. So they moved the data from here to here, revised the estimates, and then came out with the actual number. So if you look at the average hourly earnings, it went from 0.2 to 4, then went from 4 to 1. So it's kind of going down. But then when you go to non-farm payrolls, here's where all the numbers really started to get a little confusing. So if you go back to October, it was the previous reading, so that would have been September. There was 108,000 jobs created. Well, then they came out with the actual numbers, and it was actually minus 105,000. So in October, we lost 105,000. That's where you got that job loss from. Then they moved that over to the November numbers right through here. And then we conclude from there. We go in and say, okay, well, now we're expecting 50,000 new jobs, and it came in at 64. So last reading in October, dismal. But then in November, it kind of picked back up. So what a lot of people are saying, okay, with this data, it's confusing. We get it. So if you really dive into the numbers, well, let's get over to here. In Yahoo Finance, here's kind of what the data is providing us. November jobs report doesn't change much from the Fed. The reason being is, if you really dive into the job losses, you have to scroll down. Like I always say, you can't judge a book by its cover. You go down through here, and government jobs fell by 162,000 in October. Well, there's our job loss. So if you take that equation out, it was a flat jobs market. And I know a jobs loss is a jobs lost, but this number kind of tells us where the sector is. It's not in the servicing sector. It's not in manufacturing. It's in government. So maybe they're getting a little more efficient there, but no disrespect if you lost your jobs over through there. So that's why the markets are saying right now, well, this isn't as dismal as the numbers look. So based on this information, the bond market's saying, okay, we kind of like it. So it's it's up 16 ticks, and this is what's actually bringing down mortgage rates, and I'll explain that in a second. But you also go over to the stock market, and it's kind of coming down a little bit because this is saying, well, maybe the jobs report is bad, maybe it's good. We don't know what it's going to be. So people are just sitting on the sidelines. Some people are taking profits, and we're also going to look at earnings reports. So based on the news that we got for today, it was actually good news for mortgage rates. That's ticking the markets up right now. It's 14 ticks. If you're new to my channel, this is what we monitor each day. We monitor the mortgage bond. We don't watch the 10-year Treasury, and you can watch mortgage rates. But if you really want to know what's going on in the markets behind the scenes, you have to watch this right through here. It's called a mortgage-backed security. It's a mortgage bond. See that number up through there? All you have to know is if that number is going up, that's good news. That means mortgage rates are coming down. So it's up to 14 ticks today. So we're having a little bit of reprieve in the markets right through here. And remember, my forecast for Q4, or basically January of next year, is we're going to be about 5.875 to 6.25. We're getting right down there into the sweet zone that I'm looking at right now. So why is all this important? Well, because the Federal Reserve is going to meet again in 42 days, and that's going to be in January. Well, in the coming weeks, I'm going to come out with my housing forecast, and I think that'll be out this weekend. And then the following week after that, I'm going to come out and let you guys know what I think mortgage rates are going to do over the next several weeks and several months. So if you're out there and you're trying to figure out, should you lock in now? Should you take advantage of these rates? Or should you wait on the sidelines? Well, if you're a homeowner right now, I give you a tool right through here. It's called RateWatch 2.0. It's right up through there over there. Just plug in your mortgage information. And what rate would you be interested in refinancing? When it hits there, I'll call you. We don't sell the data. I monitor this myself. We'll reach out to you. We'll call you, text you, email you, and say, okay, here's what your new payment would be. Here's what the cost would be, your break-even point. If it makes sense, we'll get you locked in. But what if you're looking to buy in the spring, maybe looking to build? Let's go to our section, which is called Lock or Float. So we go over to that section right through here, and I'm really not changing my mind right now. So will rates come down a little bit? They might. But I don't want to be sitting on the edge every day during the holidays thinking, okay, can I get 0.01 off of my rate? Can I get 0.03 off? What's it going to do? Folks, if you're closing within 30 days, lock them in. You're going to have everybody in holiday mode, and the markets are going to be stagnant, I think. But if you're closing, in September next year, even in the middle of the year, what should you do? Just float. Just float. The reason being is we're going to get a lot of economic news between now and then. We're also going to get a beat on where inflation is going to go from tariffs, where the unemployment market's going to go, and also what the Federal Reserve is going to do, because they're going to be a whole new group of characters at the Federal Reserve, and they'll be in most likely in cut mode. So my expectations are, don't lock now, don't fret it. You're most likely going to see rates where they are right now or a little bit lower than where they are right now. So that's why I'm suggesting if you're a long-term duration out there, just float, reach out to us, because we would love to help you. Even if you're trying to maneuver or navigate home purchasing, or even if you're looking to build a house, reach out to us. We'd love to help you make sure your credit scores are the right ones you're looking at. What income do the banks look at? How much do you qualify for? And which program is best for you and not the bank? So folks, my name is Dan Frio. And again, the reason why I do these videos each day is I'm a licensed mortgage loan officer in all 50 states, as well as Puerto Rico. Our slogan's pretty interesting though. It's one application, one credit pool. We're going to compare your loan with over 30 different lenders. How and why? Well, if you're watching this video, you're probably thinking, okay, it's the rate update. I want a good rate. Okay, if he's saying he can get us good rates, well, what my bank did is they were like, okay, we're going to set up with over 30 other companies. These are mortgage companies. These are banks. These are credit unions that we have access to. So we can provide you with their programs and their rates. So stop that rate shopping. Let us do all the heavy work. So use RateWatch 2.0 if you're a homeowner right now. If you're looking to purchase, please reach out to us, and there's all the tools up there above. And I'll have a new video right down through here in about 24 to 48 hours, and it'll be my expectations of where housing is going to go in 2026. So pay attention to a new video coming in here. But otherwise, folks, the bond market's looking pretty darn good today going into tomorrow. But tomorrow we will have some financial news that's coming in, and will affect these things over here. So if you're a homeowner, home buyer, realtor, trying to figure out each day what next going on with those and the whys behind it, just subscribe over there. And every morning I post a video. You can come out and watch about 5 minutes and understand everything you need to know. So thanks for watching. Have a great afternoon. Bye-bye.